Bitco Inc. Common stock is a New York Stock Exchange listed security. Bitco's board declared a 25-cent per share dividend on Tuesday, May 2nd. The dividend will be paid to holders of record of Bitco common stock. So on the record date, you must be an owner of the stock as of Tuesday, May 24th, and will be paid out Wednesday, June 8th. So, who will set the ex-dividend date, which is the date you no longer receive dividends? That would be the New York Stock Exchange sets the ex-dividend date. With exchange-listed stocks, the relevant stock exchange, like the New York Stock Exchange, sets the ex-dividend date. Unlisted stock, like over-the-counter, FINRA sets the ex-dividend date for unlisted stock. The listed stock is the New York Stock Exchange. As far as board of directors, they set the declaration, record, and payable date, which are the dates you see in the question. And the SEC just regulates the market, but does not set routine dividend dates. An investor looking to speculate in penny stock would be exempt from the suitability statement requirement under which of the following circumstances? Exempt of suitability requirements would be if the investor is an established customer. You want to remember, established customers are exempt from suitability statements, but not exempt from disclosure requirements. What makes an established customer is if they have held an account and affected a non-penny security transaction or deposited fund securities at least 1 year prior to the trade. So just remember, established customer is at least 1 year, or they have already made 3 penny stock purchases on 3 different days. Could also make somebody an established customer. They are exempt from suitability, but not disclosure. Remember, penny stocks are high risk, speculative, which requires disclosure. Big Box Stores Incorporated has declared a $1 per share dividend on Tuesday, September 13. The dividend will be paid to holders of record, so the record date of Box common stock as of Tuesday, September 27th, and will be delivered to shareholders on Wednesday, October 12th. What is the record date? The record dates would be Tuesday, September 27th. As you see in the question, the dividend will be paid to holders of record as of Tuesday, September 27th. Therefore, the record date. Under penny stock rules, what is required for a broker-dealer to consider an investor an established customer? Like we talked about in the previous question, established customer is if they've, been a customer for at least 1 year or have made at least 3 penny stock purchases is another way to make somebody an established customer. The potential that inflation will devalue the fixed dividend income payments received by preferred shareholders is known as potential that inflation will devalue fixed dividend income payments would be known as purchasing power risk. So you want to remember another name for purchasing power risk is inflation risk, which is the risk that inflation will erode the real value purchasing power of a fixed stream of cash flows, such as preferred stock dividends or bond interest payments. So think inflation hurts anything fixed. Something fixed can't keep up with the rate of inflation. So because preferred stock pays a fixed dividend, it is uniquely susceptible to this risk. If living costs double, those fixed dividend checks by only half as much. Which of these is an equity security? Remember, equity means stocks, right? Stock means equity, which is ownership. The other 3 answers are debt securities. Debentures, unsecured debt, mortgage bonds, municipal bonds, secured. All the following are considered securities except which one of these is not a security? All the following are securities except US minted gold coins. You want to think gold coins is a hard asset? So physical commodities like cash and precious metal, such as gold coins, are not securities. Well, are securities? Securities are more like financial instruments representing an investment of money in a common enterprise with an expectation of profit. So all the other answers are securities. Stocks and bonds are securities, right? Contracts. I think securities is digital, not intangible. Because common stock can be sold or given away, it is considered to be common stock can be sold or given away, means it's considered to be freely transferable. Sold, given away, you can transfer it any way you want. Freely transferable means shareholders have the right to sell, gift, or bequeath their shares to anyone else in the secondary market without needing permission from the corporation. As far as liquidity, this is easy transferability, provides liquidity to public markets, allowing investors to move in and out of positions quickly. Regarding preferred stock, which of the following is false? Regarding preferred stock. Regarding preferred stock, it is false that a corporation issuing common shares must issue at least one class of preferred shares. That is false. When it comes to mandatory versus optional equity, every corporation must issue common stock to establish ownership. So every corporation issues common stock. However, issuing preferred stock is entirely optional. Many companies never issue preferred shares, but all companies issue common shares. So just think the name common stock. It's commonly issued by corporations. Preferred stock, some companies prefer not to issue preferred stock. In regards to the rights of common shareholders, stockholders, freely transferable is best described by which of the following statements? Freely transferable is best described as a holder of common stock may dispose of shares in whatever the way they want. Freely transferable. Proxy voting. What does proxy voting mean? Proxy voting allows the shareholders to vote his shares without attending the annual meeting. You can vote without having to attend the annual meeting. So you can vote, by email or mail. You do not have to attend the meeting to vote by proxy as an absentee ballot. Common stockholders' voting rights apply to which of the following? What do common stockholders' voting rights apply to? Common stock voting rights apply to election of the board of directors and authorization or issue of more common shares. So common stock voting rights apply to election of the board of directors, because you can vote on who sits on the board, as well as authorization or issue of more common shares. I think you get some preemptive rights, which is first dibs on those shares. Remember, the board of directors declares dividends, not shareholders. but you can vote once again who sits on the board. Big Box Stores Inc. declares a $1 per share dividend on Tuesday, September 13th. The dividend will be paid to holders of record of Big Box common stock as of Tuesday, September 27th. It will be paid Wednesday, October 12th. What is the payable date for this dividend? So a similar question looks familiar, right? Should. But instead of asking for the record date, which is Tuesday, September 27th, they are looking for the payable date, which would be Wednesday, October 12th is the payable dates. Will be paid Wednesday. So pretty right in front of your face. Paid Wednesday, October 12th, payable dates. A preferred stock dividend is stated as a percentage of preferred stock dividend is stated as a percentage of par value. When it comes to preferred dividends, preferred stock dividends are always calculated as a percentage of the stock's par value, which is typically assumed to be $100 for stocks. Par value for stocks is $100. Par value for bonds is $1,000. Each of the following are likely benefits of owning shares of common stock, except, in other words, which one is not likely a benefit of owning shares of common stock? Not likely a benefit of common stock would be interest payments. You want to remember when it comes to stocks versus bonds, common stock is an equity security representing ownership. So it does not pay interest. Debt securities, however, like bonds, notes, or certificates of deposit, pay interest. Common stock is equity ownership, not a debt, so it does not pay interest. Someone who purchases shares of a corporation's common stock has someone who purchases shares of a corporation's common stock has limited liability and voting rights. When it comes to limited liability, a fundamental feature of common stock, investors can only lose the exact amount of money they invested in the shares. So their personal assets, like their home, cars, or bank accounts, are completely protected from the corporation's creditors. And with voting rights, always remember only common stock has voting rights. Common stockholders possess the right to vote on core corporate governance issues, most notably electing members to the board of directors. So they also have the right to information, voting rights, and preemptive rights. Limited liability. Which of the following preferred issues is most likely to fluctuate in the line with the issuer's common shares? Which of the following preferred issues is most likely to fluctuate in line with the issuer's common shares? Most likely to fluctuate in line with the issuer's common shares would be convertible. When it comes to convertible preferred stock, this is type of preferred stock that gives the investor the right to swap or convert their preferred shares into a predetermined number of the company's common shares. So as far as price tracking, because it can be turned into common stock, the market price of convertible preferred stock is directly linked to the value of the common stock. So if the common stock price surges, the convertible preferred stock price will rise right along with it to maintain parity. Convertible preferred stock price rises along with common stock. Possible benefits of owning common stock do not include which of the following? Possible benefits of owning common stock we talked about before, since stock is equity ownership and not debt or loaning money. Interest payments, interest income is not a benefit with common stocks because it's not bonds, it's not a debt. Stocks can share profits by paying dividends, not interest payments. Preferred shares have when it comes to preferred shares, you want to remember that they have characteristics of both equity and debt securities. So when it comes to preferred shares equity characteristics, you want to remember since it's stock, it represents ownership in the corporation, pays dividends, not interest, and sits junior to all bondholders and creditors in case of a corporate liquidation. So that's its equity characteristics. The debt characteristics of preferred shares would be that it pays a fixed rate of return. So a fixed dividend based on a percentage of par. It also has no voting rights, and its market price is highly sensitive to interest rate fluctuations, just like a bond. Preferred shareholders have no voting rights or preemptive rights, because like we talked about before, common shareholders are the ones with the rights. Only common shareholders have voting rights, preemptive rights, and rights to information that belongs to common shareholders, not preferred shareholders.